Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about IRIDIUM Communications INC quarterly report. IRIDIUM Communications Inc. offers a diverse range of businesses and services, including mobile voice and data communications for land mobile end users and aviation sectors, broadband terminals, embedded devices, and handsets for maritime vessels, satellite-based IoT services, hosted payload, and other data services, postpaid and prepaid mobile voice, satellite communications, push-to-talk, broadband data, and Internet of Things, IoT, services, satellite time and location services, personnel tracking devices, and asset tracking devices for equipment, vehicles, and aircraft specialized communication solutions for high-value individuals and military/government agencies, mobile communications and data devices, including secure satellite handsets maintenance services for the U.S. government's dedicated gateway, various accessories for its devices, such as batteries, holsters, and antennas. These services are sold to commercial end users through a wholesale distribution network of service providers, value-added resellers, and manufacturers. IRIDIUM Communications Inc. Stock price drop. A year of decline in the past year. IRIDIUM Communications Inc.'s stock price has plummeted by over 34%, largely influenced by its Q2 2025 earnings report and revised outlook for service revenue growth. The company's second quarter earnings miss, where it reported lower than expected earnings per share, EPS, of $0.20, was a significant contributor to the decline. Despite surpassing revenue expectations, the market reacted negatively, causing a 20.8% drop in pre-market trading. The revised service revenue growth guidance from 5-7% to 3-5% was primarily attributed to three factors: the transition of maritime broadband services, decreased voice subscribers due to canceled USAID funding, and delayed PNT revenue. Broader market sentiments around the satellite sector also played a role, with investors reassessing risks due to new players, evolving technologies, and shifting demand for global connectivity. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the increase in services revenue, engineering and support services revenue, IoT data revenue, hosted payload and other data service revenue, commercial voice and data revenue, and government services revenue. These categories have shown significant increases, with some reaching up to 37% growth. On the other hand, revenue decline is primarily driven by a decrease in subscriber equipment revenue, commercial broadband revenue, and government services revenue. These categories have seen a decline of up to 17%. Overall, the revenue growth is largely driven by services-based revenues, while the decline is mainly attributed to equipment-related revenues. Net income and profit margins show significant improvement. The financial summary reveals a notable increase in net income and profit margins for the company. Net income rose by 52% from $24,446,000 to $37,127,000 between 2024 and the 3 months ended September 30, 2025. Similarly, net income increased from $76,435,000 to $89,507,000 over the same period. Profit margins also saw a significant improvement. Operating income margin rose from 25.8% in 2024 to 31% in the 3 months ended September 30, 2025, while net income margin increased from 11.5% to 16.3%. The stability of net income margin at 12.3% and 13.6% for 2024 and 9 months ended September 30, 2025, respectively, indicates a consistent trend. The reasons behind these improvements are attributed to increases in engineering and support services revenue, commercial services revenue, and decreasing operating expenses. Improved operating income driven by these factors has contributed to the significant increase in net income and profit margins. The company is generating positive operating cash flow, as evident from the financial summaries. The net cash provided by operating activities has consistently increased over the years, with a notable jump of $20 million from the previous year period. This indicates that the company's operations are generating sufficient cash to cover its expenses and investments, resulting in a positive operating cash flow. The company's debt level and interest expenses have undergone significant changes between 2024 and 2025. Notably, the short-term secured debt decreased from $33,000 $118 to $0, indicating a reduction in immediate financial obligations. However, long-term secured debt increased by $52,076, suggesting an increase in long-term liabilities. Total liabilities also rose slightly from $2,094,834 to $2,103,553. The net principal balance in borrowings decreased from $1,790.9 million to $1,759.8 million, while the outstanding aggregate balance under the term loan increased from not provided to $1,774.7 million. In terms of interest expenses, a decrease was observed, with a quarterly decline of -6.7% and a yearly decrease of -2.1%. The significant reduction in interest expenses is a positive indicator for the company's financial health. Management is optimistic about the company's outlook and strategy. Key highlights include: the company plans to build on existing strengths by offering specialized services and evaluating potential acquisitions to expand its offerings. Revenue has increased significantly, with a 55% rise in income before taxes and loss on equity method investments. Commercial services revenue has grown 4%, driven by increases in IoT data, voice, and hosted payload services. The company's primary sources of liquidity are expected to meet both short-term and long-term needs. Management aims to refinance the term loan at or prior to maturity and continue paying regular cash dividends. The company has a history of paying dividends to its shareholders. In 2025, it paid out $46.9 million in dividends for the first 9 months of the year and had accrued an additional $3,170 in dividends on common stock. Similarly, in 2024, the company paid out $49.1 million in dividends for the same period, with accrued dividends totaling $2,175. These figures indicate that the company has a consistent dividend payment policy, providing returns to its shareholders through both payments and accruals. Concerns over inventory buildup and supply chain disruption. Our financial summary reveals 2 pressing concerns that warrant attention: inventory buildup and supply chain disruption. Firstly, our inventory has seen a significant increase of $5,342,000 in the 9 months ended September 30, 2025, indicating potential inefficiencies in our stock management. Furthermore, total inventory levels have risen from $81,283 at December 31, 2024 to $76,187 at September 30, 2025. Moreover, our reliance on single-source suppliers for critical components and equipment has exposed us to supply chain risks. These suppliers are vulnerable to shortages caused by surges in demand, natural disasters, global pandemics, and tariffs. This vulnerability poses a significant threat to our operations and underscores the need for diversification and contingency planning to mitigate these risks. That concludes the financial summary for IRIDIUM Communications Inc. Feel free to comment below, and I will be happy to answer them when possible.